Welcome everyone to the Lifestyle Home Loan and Mortgage Update. My name is Harry Tong and I'm the mortgage consultant at Lifestyle Financial Services. I've been with the business for 3 years, but prior to that, I had worked in banking for over 19 years in various lending roles. What's happening in Australia and the rest of the world is unprecedented. Before we move into the presentation, I just wanted to let you all know that the presentation should be treated as general advice only. Also, this presentation was put together on Friday, the 3rd of April, and some of the information may have changed if you are viewing this at a later date. In this webinar, I want to let you know that how the property market has performed up until now, the impact on property from the coronavirus, current home loan offers and how that compares to what you currently have, assistance that is available to first home buyers, and tips to get yourself a better deal with the lenders. So for the past 12 months, we've seen a rapid recovery in property prices, especially in Sydney and Melbourne. Sydney and Melbourne are close to the peak of the last cycle, and some of the other cities are at their highest ever. Now this data is up to February this year, and we will likely see it fall in the next few months with rising unemployment. The pickup in property prices has also been matched by a rise in lending, with owner-occupied borrowers doing the lifting this time, whereas previously investors played a bigger part. It'll be interesting to see how prices move in the next few months. But I saw this chart the other day. It shows how property prices have performed in times of economic shocks. You can see property hasn't done too badly. We certainly haven't seen the falls of 20 to 30% like the stock market. Property downturns have more been associated with credit tightening and rising interest rates. However, this time it could be different. In the last couple of weeks, the government has banned group gatherings, and this has meant a ban on public auctions and open house viewings. This has meant private inspections only, more use of virtual tours, and some auctions going online. This will likely lead to more private sales and pre-auction sales and fewer listings. With many businesses closing, unemployment will rise and many tenants will struggle to pay the rent. The government has announced a moratorium on evictions. Borrowers who are struggling to meet loan repayments can ask their bank to pause their repayments for 6 months. So if you're in that situation, please speak to your bank. The lower transaction volumes and sentiment will impact on prices. This was the latest auction clearance rates for the last weekend in March. It's used as a measure of confidence in the market and is a leading indicator to the movement of property prices. You can see clearance rates rise last year in line with the rise in property prices and remained close to 80% in the first couple of months. It started falling in March and fell below 50% in the last week of March, largely due to the banning of auctions and open house inspections, which caused many auctions to be withdrawn. It'll be interesting to see how the market adjusts in the next few months. However, banks are still lending. With 2 rate cuts in March, rates have never been this low. If you have an owner-occupied home loan, your rate should begin with a 2. That's right, 2. Fixed rates are even lower. It's a great time to review your rates and ask your bank to match or look to refinance. Some lenders are even offering cashback to refinance with them. For first-home buyers, there is some government assistance available to you. You can make up to $15,000 per annum in concessional contributions into your super. up to $30,000 overall, and redraw this to purchase your first property. The advantage here is more favourable tax treatment via super, which will help you save a bit faster. If you buy or build a new property, you get a $10,000 first homeowners grant in New South Wales. Other states will have their own schemes. In New South Wales, if you buy a property less than $650,000, you don't pay stamp duty, which will save you almost $25,000. Between $650,000 and $800,000, you get a discount on the stamp duty. Now, please note that these are only for owner-occupied purchases. If you're buying an investment property, you don't get these concessions. A new scheme that came out this year and was an election promise is the first home loan deposit scheme. When you borrow more than 80% of the purchase price, the banks will get you to pay mortgage insurance, which can be quite costly. What the scheme does is that the government guarantees 15% of the deposit and the borrower puts in 5%. So together the borrower has the 20% to avoid having to pay mortgage insurance. It's similar to parents providing their house as guarantee. There are a number of limits to this scheme. There's only 10,000 spots and most have already been taken up. There's income limits. If you're single, you can't earn more than $125,000. And if you're a couple, it's under $200,000. There's also price limits on property, depending on where you live. So in Sydney, the property price has to be under $700,000. There's going to be another 10,000 spots available from July this year. Also, only lenders on the panel can access this scheme. That is, you will need to apply through these lenders. Of the major banks, only CBA and NAB are on the panel. The rest are regional banks. The list and details of the scheme can be found on nhfic.gov.au. So if you're looking to apply for a loan, here are some tips to get yourself in a stronger position with the lender. Cancel credit cards that you don't need. Credit cards are assessed at around 40% on the limit. If you have 2 or 3 cards with 10 or 20,000 limits each, it will have a great impact on your borrowing capacity, even if you don't use it or you pay it off every month. Avoid afterpay, at least for the time being. Watch what comes out of your account and credit card, especially anything that is discretionary. Banks will ask you to declare your living expense and then check the bank statements to verify. I've seen people declare a low living expense, but the statement shows a lot more money coming out. Show regular savings going into an account, especially first home buyers who don't have a credit record yet. This shows the bank that you have some financial discipline. For first home buyers, I really think you should try and save at least 10%. The larger the deposit you have, the less you'll pay in mortgage insurance. That's assuming you don't qualify or get the first home loan deposit scheme. Here's a list of the categories for living expense calculations. The main ones you can control are recreation and entertainment, and maybe clothing and personal care. Education and childcare can have a big impact, especially those that put their kids in a private school. If you have a loan, here are some tips to be aware of. Here are some things to be aware of. Review your rates every 2 to 3 years. As time goes by, banks offer bigger discounts to attract new borrowers and then don't drop their rates for existing. I'll show you this graph that I saw. It was published by the RBA. It's a bit dated, but the message is the same. If you took out a loan 8 years ago and haven't asked your bank for a better rate, you're likely to be paying about 0.6% or more than someone who has just taken out a similar loan. So talk to your bank or look at what's available in the market. Fixed rates. Fixed rates revert to variable rates at maturity. But what they do is they give you a standard discount unless you ask for a better rate. So when it comes off the fixed rate, go and ask your bank to see what they can give you for the best rate they can give you for a variable rate. There's some great fixed rates around, but will they fall further? I would never have expected rates to be around 2% per annum. The reduction in assessment rates, the reduction in the rates has reduced the assessment rates for the banks. And that'll help people increase their borrowing capacity. So you might be able to borrow more now than you were able to about 12 months ago. So that's the end of my presentation. I'll leave you with my contact details. If you're looking for a loan or want to review your loan, please do not hesitate to contact me. If you have any questions regarding a home loan or a business loan, don't hesitate to call me. I hope that was helpful for you, and I hope to provide you more updates in the future. Thanks for tuning in.